Hello YouTube. So today I wanted to give a brief tutorial on the IRS's Form 8832 Entity Classification Election. I get a lot of questions about this. I also assist a lot of clients with consulting around whether this is the appropriate thing to do and helping them prepare and file the form. Happy to kind of go through some of the high-level details of the form, cases where you would want to file this. Who is eligible to file this form? You have to be either a domestic or foreign eligible entity. So we'll talk about what's an eligible entity under the regulations, and the timing on filing this form. Right, there's certain time frames where you have to file this in order for it to be effective on your desired elective date. But there are late election relief procedures if you miss the deadline. So we'll talk about those as well. And then we'll go into how this changes your income tax reporting. Assuming you file this form and it's accepted by the IRS, what does that mean for your entity going forward? And then we'll also touch on at the end what you want to do if you want to change it, right? So if you've filed this form once and then a couple years down the road you decide you want to change it back or change it to something else, you can file the form again a second time, but there are again certain rules and procedures that have to be followed in order for the IRS to approve it. So first we'll just start with the very first page of this form. If you download it from the IRS website, it's pretty straightforward here. It's just the mailing addresses. This is a form that has to be printed, signed, and actually mailed to the IRS. There's currently no procedure or online application where you can submit this online or fill out the form online in electronic format and submit it. It's just got to be done by paper form, good old-fashioned way. So these are, and one thing to note is it's really important that you print and sign this like an actual ink pen on paper signature. I've seen a lot of these get returned because people use some sort of e-signature in a PDF, or they they'll print it and sign it and then scan it and then they send it back to their CPA or their attorney, and then that individual prints it and mails it in. So it's clear that maybe you signed it, but now it's a scanned copy of your signature. Sometimes the IRS will accept those, but I've seen them get turned back a lot for that very reason. If they can't 100% see that it's an actual ink pen signature. So we'll jump down to the first page of the actual form. Well, actually, let's skip to what's an eligible entity because that's really important. So if we scroll down to Part 1, Question 6, Type of Entity. So in order to change the default tax classification of your company, you file this form, but the entity has to be an eligible entity. So you have domestic eligible entities and foreign eligible entities. So under the regulations, what do they consider an eligible entity? There's generally three factors. So one, it cannot be an individual. So this is an election form that's filed for an actual entity formed under state law or a foreign country's law. You can't be, Joe Smith and file this thing to make yourself tax as a partnership or something like that. It's just not going to work. The second element is it's got to be an actual business entity. So it's an entity formed under state law if you're in the U.S., or if you're filing this for a foreign entity, it's an entity legally created under the laws of a foreign jurisdiction. And then the third element, which is really important, is it cannot be a per se corporation, which means it's automatically classified as a corporation under the regulations. This is important because what Treasury has done is they have carved out certain types of entities that no matter what, they have to be taxed as a corporation. So you can't file an election to treat it as disregarded, or if it's a corporate entity with multiple shareholders, you can't file an election to treat it as a partnership. It's got to remain a corporation. So if we're looking at domestic eligible entities, an entity that would not be eligible is a corporation formed under state law. So if you form a Delaware corporation, so if you got a Delaware Inc., that has to remain a corporation. You can't file this form and treat it as a partnership or a disregarded entity. Now you can, if you have a corporate entity, file what's called an S corporation election, assuming you meet this, all those eligible requirements. But I'll cover that in a different video. But for purposes of this form, if you've got a corporate entity in the U.S., it's got to remain a corporation. So now if we're looking at foreign eligible entities, it's the same kind of analysis, right? I mean, the IRS, within this form, if we scroll to the bottom, let's see, so they've got a list here for us. So foreign entities classified as corporations for federal tax purposes. So if you're filing this 8832 for a foreign eligible entity, or for a foreign entity rather, you have to check this list. If the entity type that you want to file this form for is on this list, then you can't file this form. It's got to remain a corporation by default for federal tax purposes. So, so an example here. So if you have a Pakistan public limited company, or what's another really common one I see often here? Let's see, like these Swiss entities, German entities. If you've got one of these entity types, then you can't file this form. But if you have an entity other than those that are set up in Germany or Greece or France or wherever, you can file this form to change the default classification. Okay, so we go back up here. Let's see. Okay, so now that that's been covered, actually let's touch on domestic eligible entities again, just elaborate on this a bit. So what would be an example of a domestic eligible entity? So it's essentially anything that's not a corporation, right? So the most common change here would be for an LLC. So a U.S. LLC has its own default rules, right? If you've got a U.S. LLC that has one owner, it's by default a disregarded entity. If you've got an LLC with more than one member, it's by default a partnership. So those are the default rules depending upon how many persons or entities own the LLC. But an LLC is a domestic eligible entity, so you can change the tax classification for it. Okay, so we'll go back to the front here. Okay, so the top section, pretty straightforward, right? You've got the name of the eligible entity, so you've already looked at the list, you've already assessed whether or not it's an eligible entity. If it is an eligible entity, you can go forward with filing this form. So you've got the name of the entity, an EIN. This is really important. You need an EIN in order to file this form. If you just file the form with the name of the entity and the address and everything else, the IRS will not accept it. So in cases where you might need to file this for a foreign company, the foreign company is going to have to get an EIN first. They need the EIN in order to make this, filing. Otherwise, like I said, the IRS is just going to return it. Okay, so this section here is relevant. Address change. But you would check that box if between the time you filed the EIN and now you're filing the entity classification election, you might have moved, right? So if you apply for the EIN to a certain address and then a month later you switch offices and now you're filing this form, use your most current address. Don't use the one that's currently in the IRS database if it's no longer valid. So put your current address, check the address change box, and then you should be all set. Because they will send you a confirmation letter once this has been approved. And then the late election classifications here, we'll talk about this later, but if you are filing this late, you would check one of these boxes depending upon what late election relief procedures you want the IRS to look at to approve your late filed entity classification election. Okay, so those are just the information on the entity. So let's go into kind of instances where you would want to file this form. So we'll talk about domestic LLCs. This is probably the more common one. So an LLC, like I said earlier, it has a certain default rules, but a lot of times the default classification might not always be what's best for the company. So for example, if you've got a U.S. LLC with a mix of U.S. and non-U.S. owners, by default the multi-member LLC would be a partnership. But if you've got non-U.S. owners in the entity and you've got, let's say, U.S. Trade or Business Risks or ECI, You could have potential withholding obligations on the income that's being allocated to those non-U.S. persons. So oftentimes it makes it easier to just treat the entity as a corporation, right? So the corporate entity is the tax-paying entity, and those non-U.S. owners don't have to worry about getting an ITIN or having any of your allocation of income being withheld upon. Sometimes it's just cleaner. Okay, so let's go into the election information to begin with. Okay, so the type of election, initial classification by newly formed entity. This is, you would check this box 99% of the time, right? So if you've got a newly formed entity and you want to change it the first time from its default classification, you would check 1A, right? 1B would occur is if you're filing this form for the second time, right? So if you've already filed this, let's say you had an LLC and you wanted to treat it as a corporation, you hit 1A, you filed it, and then a couple years down the road you say, no, I don't want it to be a corporation, I want to change it back to a disregarded entity. This would be the 1B checkbox, right? You want to change it back from the first election you made. Okay. So question 3, does the eligible entity have more than one owner? If yes, you can be either a partnership or a corp. If no, you can be a corp or you can be a disregarded entity, right? Okay. Let's go through here. Okay, so we'll go down to 6. Okay, back to 6. So this is the type of entity we're looking for. Again, domestic eligible entities. In a U.S. context, that's going to be a U.S. LLC or a U.S. limited partnership. Even a limited partnership could, file an election, be taxed as a corporation. You don't see that very often in the U.S., but it is possible. It does happen for certain reasons. Foreign entities, the same principles apply, right? If you've got a foreign eligible entity, and let's say it's a limited partnership. So let's say you have a Bermuda limited partnership, which is by default a partnership for tax purposes, but you want it to be taxed as a corporation. You would click 6D in that scenario. And so it's beyond the scope of this video, but oftentimes it does happen, right? You've got offshore hedge funds and private equity funds. For legal reasons and liability protection reasons, they often will structure their feeder funds as limited partnerships in these kind of tax havens. And they bring in a mix of U.S. and foreign investors. And so if you have a Bermuda limited partnership, it's a partnership for tax purposes. But oftentimes, if you've got a U.S. investor in that fund, they don't want it to be a partnership, right? It might make better sense for it to be a corporate entity, which would make it either a PFIC or a CFC, depending on how many owners there are, and that's generally preferential for federal tax purposes for those U.S. owners. Right, so a foreign entity that's an LP could file this election to be taxable as a corp, which would change it from a partnership for tax purposes into a corporate entity, and then further down the line you would assess whether it's a PFIC or perhaps a CFC. Line 7, if this is a foreign entity, enter pretty straightforward, the foreign country of organization. So if you've got a Bermuda entity, Bermuda. If it's a Cayman Islands limited company, you put Cayman Islands. Okay, so line 8. So this is really important. Election is to be effective beginning, a certain month, day, and year. If you've got a newly formed entity and kind of off the bat what you want to do with it, then you would file this form shortly after formation, right? So the deadline to file this form is 75 days within the desired effective date. So if on Jan 1, 2020, I set up a Wyoming LLC, and I had a couple of persons that were members in there, and I knew I wanted that to be a corporation and not a partnership, I would enter January 1, 2020 as the effective date, and then file this form to change it to a corporation within that 75-day period. The reason this is so important is because if you don't get the election effective on the date of formation, then you could have a situation where you have a gap where you have an entity filing, let's say, a short year partnership return, and then they're filing a corporate return. So let's use the same example, an LLC partnership, Jan 1, 2020, the entity is set up, but you don't get this thing, prepared until November, right? So it's beyond the 75-day mark, and you can't get the late election relief, procedures approved. You would have a scenario where from Jan 1, 2020 up until, let's say, October, it's a partnership, right? So you've got an LLC that's filing a partnership tax return, and then when the IRS approves your election effective, October 31, okay, well now you've got a short period return for a corp. So you're filing two tax returns for the same tax year because you couldn't get this thing timely filed and get the election effective on the date of formation. So, really important to be careful with the timing on this so you don't, create more work for yourself, but it kind of eliminates the whole purpose for filing this, right? I mean, you want it to be as clean as possible. You didn't want the LLC at any point during the year to be a partnership. Okay. So name and contact the person the IRS may call for information. Also pretty straightforward. You just put down, if it's a single owner, you put down the owner's information, their contact details. You can also put an authorized representative down, your attorney or officer, director of the company. And then, like I said, again, print, sign, date, and put your title. If it's an LLC and you're the owner, you put managing member. That's good. If it's corporate entity, you can put some sort of officer, C-suite officer title or director, and that'll usually suffice. Okay. And then the third page is the late election relief procedures. So this goes back to if you miss the filing deadline, if you miss that 75-day window to have the desired effective date. So we'll use our same example, the LLC form Jan 1, 2020. If you're getting around to doing this in October, you've missed the deadline, right? So not all is lost, right? They have late election relief procedures where you can, pursuant to, so the most popular one and the easiest one to get it done through is this late election relief sought under Rev Proc 2009-41. So if you read the Rev Proc 2009-41, they have certain elements that have to be met, and if they are, you can get your late election relief approved. And the IRS is generally pretty good about this. They understand people miss the deadline. So as long as you're filing it within, in my experience, if it's within a year, you can kind of get away with it. If it's beyond a year, it gets a little testy. You might have some pushback. But the Rev Proc 2009-41, it lays out four key elements, right? You failed to obtain the election solely because it was not timely filed. And that means, that there's not some other extenuating circumstance where the IRS just rejected the application for whatever reason. So, like for example, the eligible entity issue, right? I mean, if the election isn't going to be approved because it's not an eligible entity, then you're dead in the water. You can't do anything with that. The second piece is the taxpayer has not filed the first tax return yet under the new election, right? So if we use our LLC example, if you're doing this in October, you miss the 75-day window, but the tax year hasn't closed yet, right? If you're on a December year end, the year hasn't closed, so we haven't rolled over to Jan, Feb, or March of the following year when you would be preparing the first 11/20 corporate return, having to file it. And so that's why I say if it's kind of within a year, you can normally get away with it because the first tax return wouldn't even have come due yet, so you're okay there. The third element is you have to show some sort of reasonable cause for not filing or for not timely filing. That's a pretty low threshold. You could a lot of times it's simply I thought that this could be filed concurrently with the tax return. It was an honest mistake, or a lot of it is reasonable reliance on the attorney that set up the entity or the tax preparer that you normally use if they didn't, properly advise you of the deadline. So, you can use that, throwing your, attorney or advisor under the bus. I'll leave that to you to decide whether you want to do that. But it does work. Honestly, it does work. If you did rely on somebody and they didn't really fill you in on all these details and educate you properly, you can get away with using that excuse. And then the fourth and final one is 3 years and 75 days has not passed from the intended election date. So technically, if you file this within 3 years and 75 days of the intended election date, then they could approve it. It's kind of rare though, because the issue is if you file a tax, you have to still try to file all your tax returns timely. So if you file a tax return for the first year and you haven't made the election yet, you're going to get a notice from the IRS. They're going to send you a letter saying, hey, thanks for the return, but we're not going to accept it because you don't have an election on file. And so that's going to be your immediate cue to get the election filed. So the 3 year 75 day mark is kind of odd, because it would kind of presume that you've been filing returns timely every year, they've been getting rejected, and you're just, I guess, ignoring the notices that say they're not being processed because you haven't filed an 8832. So again, the 3 year 75 day mark, it's in the Rev Proc, that is a standard, but realistically try to get this filed within a year of the intended election date, and then that should be, you should be okay. Okay. And so the final element was, what do you need to do to change this? So the IRS, once you file the election and change it, you generally have to stick with it for 5 years. There's certain special circumstances where you can get that changed, but again, it's kind of rare. Most of the time, what I see in this context is, the entity, if you want to change it, you kind of just wind the entity down and open a new one or restructure it in some way, rather than trying to reach out to the IRS and get their permission to have the tax classification change again or get it reversed. So if you cross that bridge, I would definitely, that's not something I would recommend doing on your own. I would talk to a tax professional that's had experience doing that, because it can get a little tricky. So, okay, so I think that covers it. If you guys have any questions, comment below. Happy to respond, or send me an email, and happy to respond that way as well. Thanks for listening, and hit that subscribe button, and I look forward to seeing you guys again.